Hello students, today we are going to see what are the features of income. In your exam, features of income can be asked for 16 marks. Income refers to any monetary receipts which is derived from definite source with some sort of regularity and it includes the following: profit and gains, dividend, voluntary contributions received by a charitable or religious trust or scientific research association or games and sports association, institution or any university or educational institution or hospital. Value of any perquisite or profit in lieu of salary. Perquisite means any benefit which is given by the employer to the employee. For example, suppose my employer has given me a house in which I can stay and I don't have to pay the rent. Okay, so I'm staying in a staff quarters and I don't have to pay the rent. So the value of rent would be a perquisite. Okay. Or suppose my employer is charging me 5,000 rent. Okay, but fairly in that area the rent is approximately for that property approximately 20,000. So 15,000 is the benefit. So 15,000 would be the perquisite. Okay. Any special allowance or benefit granted to meet the expenses while performing the duties. Okay. Any special allowance given by the company. For example, not company, any special allowance given by the employer. Okay. Or benefit. Now, suppose I have 2 children and some fees. The fees of my children, my school fees of the children are paid by the company. Okay, so that would be like a allowance. Okay, it is not paid by the company. What the company is giving, company is paying some amount to me so that I can pay school fees of the children. So that amount would be an allowance. Okay, or for transport purpose, suppose I am commuting from one place to another place. I am traveling from Mangalore to Bangalore. Okay, and company is paying some amount every month so that I can travel. So that would be a special allowance. The amount which is paid by the employer to the employee so that some expenses are taken care of. So that will be called as a special allowance. Okay. Any allowance granted to meet personal expenses at the office or to compensate the increased cost of living. The value of any benefit or perquisite obtained by any representative assessee. Any sum chargeable to income tax under business or profession, any capital gains, the profits and gains of any business of insurance by any insurance company or cooperative society, any winnings from lotteries, crossword puzzles, races including horse races, card games, gambling or betting. Any sum received from the employees as contribution to PF or superannuation fund. Now, whenever you work in a company and there is a provident fund account, employees provident fund account, so what happens? A portion of employees' salary is deducted and put in that account, and even employer's contribution is put in the account. So employee's contribution, which is deducted from your salary, that is also income. Okay, the employee's contribution. Okay. Any sum received under key man insurance policy including bonus. So Keyman insurance policy is a special policy which is given by companies to special people, to the key people of the company. For example, CFO, CEO, managing director, the main people, the key people. Okay, so the company might give them some special insurance policy. So any amount received because of that policy is also income. Next, any sum which exceeds 50,000 received without consideration. Okay. The profits and gains of banking carried by a cooperative society with its members. Definite source of income. Income should be earned from a definite source of income. Okay, there are 5 heads of income. So income earned will be either income from salary, income from house property, income from business or profession, capital gains, or income from other sources. Income may be earned legally or illegally. So even illegal income is taxable under Income Tax Act. Okay. No distinction is made between legal and illegal income. However, expenditure incurred to earn illegal income is not deductible. So whenever you conduct any business, so there might be some expenses to conduct business. So those the benefit of those expenses are given to the assessee, correct? But in case of illegal business, the benefit of the expenses is not given. For example, suppose I have a illegal business. Suppose I kidnap children. Okay. So when I kidnap children and I ask for ransom from the parents, so while kidnapping children, okay, and the ransom which I'm asking from the parents, if I'm earning money from kidnapping, so for that I have to pay tax. Whatever income I'm earning, I have to pay tax. Okay, but there might be some expenses which I'm incurring. For example, I might need a van so that I can kidnap easily, or maybe some arms, ammunities. Okay, I might appoint some people who can work for me, who can kidnap for me. So there are some expenses I might have to pay to them, correct? So those expenses will not be, the benefit of those expenses will not be given under the act. Okay, so yeah. So income may be earned legally or illegally. So in case of legal business, the expenses can be claimed. In case of illegal business, expenses cannot be claimed. Okay. Next, income may be received periodically or in lump sum, provided it is revenue in nature. Okay. Income can be periodical or in lump sum. For example, now every month I receive salary. This is a periodical income. Or every half yearly or yearly you receive bank interest. It is periodical income. But there are some income which you receive at lump sum. For example, when you get retired, you get compensation, gratuity. All that is a lump sum amount. That is also income. Okay. For example, if you win a lottery ticket, that is also a lump sum amount. So that is also income. Income should be from external source. Internal revenue is not treated as income. Receipts may be in form of money or in kind. Okay. Suppose you go to a game show and you won one car from the game show. That car is still an income. Okay, you have to pay 30% tax on that car because you are receiving income from a casual income from a game show. Correct? So the income can be in cash or in kind. Okay, if you are receiving in kind also, still it is income. Income may be temporary or permanent. Reimbursement of expenses is not an income. Okay, suppose you stay in Mumbai and your company has sent you to Delhi for 15 days. Okay, and you stay there. You have gone to Delhi for a meeting on behalf of your company. Okay, So there might be a hotel expenditure to stay there, right? Food, okay, food expenses. So you pay from your own pocket, then you come back, and after coming back you show the bills to the accountant and you take money from there. Okay, so company is reimbursing your expenses. So reimbursing your expenses is not income. Okay, receipts on account of dharmada gaushala is not an income. Pocket money received by wife is not an income. Income may be positive or negative. Negative income means loss, which is also included in income. Income arises on actual basis or accrual basis, both are taxable. Okay. Personal gift received from any relative is not taxable. However, gift received from others is taxable if the aggregate amount of the gift exceeds 50 lakhs. If the value of gift exceeds 50 lakh and that gift is received from a non-relative, then it is taxable. But gift or money received at the time of marriage is not taxable. All this we'll be studying in the next chapter in detail. Same income cannot be taxed twice. Income should be real and not frictional. Mere production of commodity does not amount to income. So these are the features of income which can come for 16 marks. Definition of assessment year and definition of previous year. What is assessment year and what is previous year I have already explained in the previous class. Okay. Assessment year is the year of assessment. Previous year is the year of earning. The year in which assessee is liable to be assessed for tax on the income of the previous year. And previous year is, it represents the year in which the income is earned or the year immediately preceding the assessment year. For the income earned in the previous year 2019-20, the assessment year is 2020-21. Exceptions to the general rule. Sometimes the previous year and assessment year is same year. Okay. Always what happens, if previous year is 2019-20, assessment year is 2020-21, correct? But there are some exceptions. In this case, if previous year is 1920, assessment year is also 1920. On the same year it is assessed. Okay. See, when first, income earned by non-resident shipping business in India. Okay. Now, suppose just a second. Yeah. Okay. Now, this is India. Oh, sorry. Okay. This is Indian coast. Okay. Okay. Now one ship has come from abroad, okay, from whatever place, and it has come to India. And the ship is working here in India. It has made some money. Okay, there is some income in India. Income it has earned in India. So this ship has to pay tax on the income earned in India. Then only it can go back. Otherwise it cannot go back. Okay. So in this case what is happening? The year in which it is coming to India, the same year it is earning income, it is paying tax, and then only it is going. It is assessing its income at the same time. Okay. So now if in this case, if previous year is 2019-20, assessment year is also 2019-20. Okay. So income earned by non-resident shipping business in India. Okay. Income of a person leaving country permanently or for longer duration. Okay. If some person is citizen of India, staying in India, and he is permanently shifting to some abroad, to some other country, in that case That person, in the year in which it is going the same year, he will pay all the liabilities and then he can leave. Okay, so in that case also previous year and assessment year can be same. Next, AOP BOI started for shorter duration. Okay, if AOP or BOI was for a small purpose, was only for 6 months or 9 months or 1 year, the year in which it is earning income, same year it will pay tax, and then it can dissolve. Next, income of discontinued business. Okay, if a business is discontinued, okay, in the middle of the year, same year it will assess the tax and it will pay the tax. Next, person likely to transfer property to avoid tax. Okay, so if the assessing officer feels that this person is selling all the property and going to run from the country, so if assessing officer feels that, the assessing officer can ask that person to pay all the taxes, okay, during the year in which the sale is being made or the transfer is being made. Let's see who is a person and who is an assessee. A person may be an individual, a HUF, firm, company, an association of person or body of individual, a local authority, or an artificial jurisdictional person. Assessee. Under Income Tax Act, an assessee means a person who is liable to pay tax or any other sum of money like interest, penalty, etc., or in respect of whom any proceedings has been undertaken for the assessment of his income. Let us see who is deemed assessee and who is assessee in default. Deemed assessee means a person who is liable to pay tax on the income of any other person under the Indian Income Tax Act. Tax paid by the parents on behalf of their son who earned income in India and who is presently working abroad. Assessee in default means any person or assessee who fails to pay the tax or fails to comply with the requirements of the Income Tax Act in India. One who does not file his returns or files a default return is assessee in default. Agricultural income. Agricultural income will be explained in detail in the next class. Okay. Thank you very much, students.